People have the nerve to say options are risky. I say no, people are risky. The way that people use them are risky. Driving a car is not risky. The person driving it, if they drinking, if they texting. And so we got to start taking
Hmm.
options out of the category of risky and looking at the person and how they're using it, because used correctly is there to minimize risk. And we do it in every other area of our life. But when we come to the stock market, we act like it's a different set of rules.
This is the Passive 25K podcast, a podcast built around the vision of creating wealth through passive income for ourselves and others. The idea of creating income while you sleep seems like a dream come true, but for most professionals, turning this into a reality is a different story. On this show, you will hear real people breaking passive income streams down to the basics, giving you the next steps to start your own passive income journey. If you're new to the show, my name is Kyle Reedstrom from Fargo, North Dakota, where I get to work with my team of agents and investors each day to complete our goal of $25,000 a month in passive income. Now, let's get right into our next conversation. This is the Passive 25K podcast with Kyle Reedstrom. We are the proud home of Passive Income University. We help working professionals with one source of income start and complete their passive income journey. And a quick story, you guys, we have a Burr investment going on in North Fargo, our market right now. And we've been trying to take footage and bring our community into what's going on with that, because we want to teach people how to use these tools in real estate and other things to continue their passive income journey. Find us at p25kg.com. And if you're looking for next steps today, click the button and let's have a talk and make a game plan. But today, our episode 32, we're coming at you with the Passive Income Investor's Guide to the Stock Market with Jason Brown. Jason, thanks for being here, man.
Kyle, thanks for having me, man. I'm really excited to be here and dive into all things passive income in the stock market.
Yes, yeah. Well, I want to give the audience a little introduction on you, and I also want to hear from you a little bit on just your expertise in this. But Jason is the founder of Power Trades University, has over a decade of stock and options experience in trading, and is a podcast host and a YouTuber. Jason believes anyone can profit from the stock market, even if they've lost money before. They just need to know how to identify the best time to buy and sell and the correct option strategies that can supercharge returns and minimize risk. Jason helps people go from nervous beginners to confident stock and options traders. And Jason, we're super glad to have you on the show. Jason, I want to give you a couple minutes just to speak to your expertise, how long you've been in this, and what you're all about with the stock market and as your place, man.
Yeah, awesome. I think first it's super important, since I'm new to your audience, to understand, where I came from and how I got introduced to investing. And it really goes back to my childhood. We grew up pretty poor, and I always like to give respect to my mom and say we had love, we had food, we felt safe for the most part, but financially, we just didn't have it all. And at a young age, I was always curious and very aware. And I remember the first time I went to my friend's house. I went to my friend's house and I went in his bedroom. We're playing. I'm spending the night, and I'm like, "Wow, you have a bed." And he's kind of looking at me like, "What do you mean?" Like, of course I have a bed. And I'm like, "Well, I thought beds were for grown-ups because we slept in sleeping bags on the floor. We didn't have a bed growing up." Now, later it was like, could we not afford a bed, or what was the case? And so I started at an early age noticing some financial differences. And so he had two parents. My dad passed when I was 2 years old. So I'm like, well, maybe it's because they got two parents, two incomes. But I'm like, that can't be it, because my mom works two jobs. So she works two jobs and we still don't have enough. And then I remember dating a young lady, and I drove out to her house in Canton, Michigan, because I'm from Detroit. And I remember pulling up and I was like, wow, they don't have bars on the window. And I thought everybody had bars on their window. Only people who didn't have bars on their window were like the kids in Beverly Hills 90210, the TV show or something like that. But
Yeah.
everybody I knew had bars on their window, because everybody I knew also stayed in Detroit. And so I really started at an early age realizing, like, okay, there's a difference between us and where other people are financially. And so I'm working a full time, not it was partially full time, more part time at Best Buy. I'm selling phones for Sprint PCS. I'm selling cell phones, and I'm working all my weekends away. I'm in there working every holiday, nights and weekends. And I remember this lady pulled up, And she pulled up in a Mercedes Benz, beautiful Mercedes Benz. And she gets out. She comes into the store because I could see who pulls up because the glass door is open. And she's walking towards me. And I'm thinking she's about to give me her phone number. And she did, but not for the reason you think. She said, I'd like to upgrade my cell phone. And it wasn't about the girl. It wasn't about her. It was about what she represented. And she represented that, she was free on a Saturday. She's driving my dream car at the time. That was a Mercedes Benz. She's upgrading her phone. She looked like she has on a sundress. She's out to head to a barbecue with her friends and family. And I'm stuck in the store. And so at this point, I'm like, something's got to change in my life. Like I don't see myself selling cell phones for the rest of my life. And so I started hearing about the stock market, and people are like, you got to invest. You got to start, having your money work hard for you. I'm reading these books. And so I'm like, all right, I'm gonna get involved in the stock market. So Kyle, I do what, the best thing I know how to do. I'm like 18 at this time. I take the last $2,000 I have from my high school graduation, and I'm like, I'm gonna go open an investment account. And so I go to a well-known bank. I won't say the bank's name, but I go to a well-known bank, and I'm like, I want to open an investment account. And the girl's like, so why do you want to open an investment account? I'm like, to be rich. Like, why else do people open an investment account? Like, I thought it was a silly question. Like, is there another reason to open one? And she was like, so you want aggressive funds? I'm like, yeah. Those are literally the only two questions she asked me. Gave her my $2,000. I'm on my way, Kyle. I'm going to be rich. Because you hear people say, start early, start young. You hear all these.
Yep.
If you would have put $2,000 away when you were 18, by the time you're 40, you would have been a millionaire. So I'm like, got it. Let's start early. I come back, I'm 20 years old. I'm like, how's my $2,000 investment doing? It's down to $700. And so now I'm like, give me my money back. Give me the 700, because that was the first, at the time, I thought that was the worst thing that could happen. That was all the money I had.
Yeah.
But what it did for me was I made me realize I said, so the professionals can lose money. I said, give me my $700 back. I could have lost my own money. And so that was the first time I realized that there was no magic pill that these people had with investing. They lose money too. So I'm like, they're just human. They can lose money. I can lose my own. At least I would have understood why. And so I took that $700 and I spent $200 on some Jordans or something to make me feel better. So I have $500 left. I do what most of us do. I said, all right, I'm going to invest in the company that I work for. For me, that was Sprint PCS. And so I'm like, okay, I can buy 100 shares because our stock was $5 a share. And I'm making $8 an hour, $64 on a Saturday. When you take taxes out, it's $50 take home. So I'm like, if I could just make $50, I won't have to work weekends. And so I buy the stock at 5. I do what most of us do, buy a company we know. I buy it at 5. Immediately after I purchase the stock, it starts to tank, go down to $4. I'm like, you gotta be kidding me, right?
Yeah,
I'm
man.
like, maybe this isn't as easy as I thought. And so, but then you hear people say, well, you got to be in it for the long term and you got to give it time. So I'm like, don't panic. All right, let's give it some time. And then the stock goes back up to 5. And I'm like, okay, here we go. Just needed to go to 550. As soon as the stock gets to 5, it's like sold off back down to 4. I'm like, get the F out of here. Like, I'm just upset. I'm thinking the stock market is rigged. I'm like, it's gambling. It's a casino. There's no rhyme and reason to it. And then the stock went back up to 5 again. And I said, I've seen this before. I'm going to get out at 5. So I got out at 5. It broke even. It went down to 4. I bought in and went back up to 5. I got out. I made my first $100. So what happened was I didn't realize that was called a channeling stock. The stock was channeling between 5 and 4, 4 and 5, 5 and 4. So I'm like, what other patterns don't I know that exist? So I spend tons of hours reading books, studying patterns, practicing, and I get really good at understanding these patterns. And so then I'm like, man, if I did that with $500, what if I would have had $5,000? I'm like, I would have been rich. Then I was like, what if I had $10,000? I was like, oh, it's game over. So now I'm like, how do I get $10,000? So I have a scholarship to Wayne State. I applied for financial aid because I knew they would double pay the account and I would get a refund check. I applied for I had a scholarship. I applied for financial aid. They double paid the account. I get a $10,000 refund. I take that $10,000, I put it in the stock market, and I grow it to about $120,000 as a 21-year-old kid. And so I drop out of school. I'm full time day trading. I run the account up to about $300,000. I, at this point, say, I am going to buy a condo in downtown Royal Oak, cash money. That was my dream. I'm like 24, 25 at this point. I'm like, I'm going to buy a condo, cash money. So I risk a quarter million trying to make half a million. I lose it all. So could you imagine?
Oh,
I thought losing $1,300 was painful. At
oh
25,
man.
I lose a quarter million dollars and I'm like devastated. I'm like, I don't know where I'm gonna get that kind of money from again. And so, long story short, I now know what I want to go to school for because I dropped out of school to trade full time. I go back and get a job, which I heard you talk about, like getting one income up and running and then using that to get other incomes. Well, that was kind of my path. This time I went back to school. I got a job doing the only thing I know how to do, which is selling cell phones at Verizon Wireless. Well, I was at Sprint before, but I go back to work for Verizon this time. I chose Verizon because number one, I get my cell phone paid for free. Number two, they had tuition reimbursement. I'm like, now I know what I want to go to school for. I want to go to school for finance. So I use the tuition reimbursement to go back, get a finance degree. I'm like, I got to earn some money. I base my lifestyle off the hourly and I'm in commission sales. I take all my commissions, I get back into the stock market. But this time, when I lost all my money, I said, I'm going to document myself making it all back. And so that's how I actually started my YouTube channel. When I lost all my money, I started recording myself trading, making the money back. And then I took a course and I was like, well, I wonder if I really knew what I thought I knew or was I lucky? And then I became as good as the teacher. And then I was like, why don't they explain it like this? How come they don't explain it so that regular people can understand it? And I was like, I'm going to create a course where regular people like me can understand it. And that's what launched me into building Power Trades University. And that's what launched me into teaching and coming up with some of the sayings like you see on my shirt that you never go broke taking a profit. Because there was a point in that trade where I was actually up 20, 30,000, but I'm trying to make half a million. So that wasn't enough. And then I ended up losing it all and going broke. And so now I realize like you never go broke taking a profit. You don't have to do it all in one swing. And there's a bunch of other little sayings that I've learned from real life application and not from reading a book. And so that's literally how I got introduced to the stock market and how I got introduced to teaching people how the stock market works.
Man, Jason, I so appreciate you sharing that story. And I think I know for myself, there were several moments along there that were extremely relatable, man. Like just all of the different, like the first time you're exposed to the stock market going up, down, and all around. I have a funny story. When I was 16, I actually really wanted to get into like stock market investing. So I was thinking the same thing, man. I'm like, I can make money by using my head instead of, like picking rock or mowing lawns, right? And so I tried to sign up for a Charles Schwab investing account at 16, and they said, of course, we can't let you. So I thought the loophole was to use my dad's social security number instead of mine. And let's just say I can no longer trade at Charles Schwab for the rest of my life. They just said, we don't want to take a risk on you, buddy. But my whole point in that is, dude, this learning curve, everybody in the audience is sitting there saying, I've had that moment where I got burned. And then maybe they didn't come back. You know what I mean? And so, I think your experience in this is so unique. And when I think of the stock market, Jason, I think of buying and selling. Like I think of, companies are out there. It's very superficial the way I think of it. And then I've had like an emotional or an experience that was good, maybe one that's bad, and then I've kind of left it where it's at. But I really like to ask you the question, what am I missing from, it's more than that, right? Like as you get into the depth of this and as you get into making income from the stock market, it's more than just, hey, I buy and sell and it goes up and down, right?
Absolutely. I mean, you guys being real estate guys, most people don't realize how directly correlated real estate is to the stock market. A lot of people like to put stock market and real estate investors against each other and which one's better and this, that, and the third. And the reality is, you'd be surprised how similar or how close they are. And so when you say like there's more to just buying and selling, that's one of the things that we teach is that most people, their only way of making money is buy low, sell high, right? Buy it at this price, hope the price goes up. But we all know the market can go sideways and down. And so what we're all ultimately taught is one way to make money out of the three ways that a market can move. And so when you do the math on it, that's a 33% chance of knowing how to make money in out of the 3 days, three ways that the market can move. So that also means there's a 67% chance you're going to fail if it moves sideways or down. And so what we teach people is, how do we make money no matter which direction the stock market is going? And that's why I'm so passionate about call and put options, to where we try to teach you how you can make money from stocks falling, how you can also do what I call my rental income strategy. You can buy a company the same way that you buy a property, and you can sell call options against it and collect monthly rental income. And it's the same type of research too, right? In the stock market, you're researching like, where's the neighborhood that people are moving into? You got technologies, the sector, right? As far as a city. Then the neighborhood is artificial intelligence. And then what kind of houses are being built there? You got Microsoft, you got people who need server space. So you might look at chip stocks like NVIDIA or AMD. It's the same type of research that goes into a house that goes into the stock market. And so it's not really that different. And then the other thing is, people buy houses for cash flow, right? And appreciation. Same
Mm-hmm.
thing in the stock market, right? You can buy that house, that Microsoft house, that Amazon house. And what you can do is you can sell call options against it, and you can collect a monthly rental income the same way that you do on a house. And then you obviously hope the stock or the company appreciates in value, and then you can offload it someday. And then on the flip side, people say, well, but what about stocks can go to zero or go out of business? Well, depending on where you live, there are certain areas that are just not going out of business ever, or definitely no time soon. And it's the
Mm-hmm.
same thing with the stock market. I can buy 1,000 shares of Amazon, Microsoft. I can pretty much guarantee you won't wake up and the company will be at zero. And so the same thing with real estate. There are some houses in some neighborhoods that will just hold their value. There are some companies, some stocks like Coca-Cola, Pepsi, they just hold their value. Unless we stop drinking the world's leading brand soft drinks, they are going to be there. But sometimes when it comes to the stock market, we try to isolate it and make it seem like, well, stocks can
Mm.
go to zero. Well, you could buy a house in the neighborhood that goes to zero, or you could buy a house in a stable city and stable community that people are moving into, and most likely won't crash down to zero because it's an affluent neighborhood, or it's a place that people want to raise kids. They want to send them to that school, whatever the case may be. Same thing with Apple, the Microsofts, the Amazons of the world.
Yeah.
Unless we give up 2 day shipping, Amazon is not going anywhere.
Man, Jason, what you just said, I've never heard it said the way you just said it. And I completely resonate with you when it's like real estate versus the stock market. It's like a battle sometimes, or real estate investors versus stock market investors. And I completely see the corollaries. I completely see the similarities, just like you explained. And we talk. In fact, I think I don't know if I mentioned this yet, but we just haven't talked about the stock market on our podcast. We brought you in. We're like, we got to have Jason on to tell us about the stock market, because this is a topic that is a massive wealth creator, and we're avoiding it because we say, hey, we're cash flow people. We're big on cash flow. We're big on tangible. We're improving our lifestyle budget. We're chasing financial freedom. But you're talking about concepts in the stock market where you can apply the same principle if you're looking for cash
Exactly.
flow. And so I want to dive into those a little bit. Like, can you dig a couple layers deeper on how you're maybe even an example of how you're kind of using the stock market in a cash flow sense or vision?
Yeah. And first of all, again, it's just an honor to be here, because I'm not one that's like, we're better than the stock market, or stock market's better than real estate, real estate. It's like, no, you need both to create wealth. We forget we're trying to create wealth. We're not trying to jump on a
Yeah.
bandwagon of who's better or not. We're just trying to get rich.
Yes.
Like, if that's real estate, if it's stocks,
Amen.
if it's both, let's do both. And so one of the examples I like to give you, because I like to use real estate examples so that real estate people can realize, like, oh my goodness, he's right. So when you think about, and actually, I use this in one of my stock market presentations. I always tell people, I say, most of you are already playing the stock market. You just didn't realize it. If you've ever bought a house, you bought a call option. And they're like, what do you mean? I'm like, think about it. In your industry, they might call it wholesaling. But when you think about it, if there's a house that's $200,000, if you want to buy a house, you go see the house. You say, hey, I want to buy your house for $200,000. Say, great. They say, okay, give me 10% deposit, or not even 10%, like put $2,000, 5,000 earnest money deposit down. Then you can do an inspection, you can do an appraisal. You have 30 days. Okay, so you have 30 days to get an inspection appraisal. If you get an inspection and appraisal, house comes back, people are moving in this neighborhood, value shot up because of COVID, whatever the case may be. And like not a house worth $250,000. Now you have two choices within those 30 days. You can still buy the house for $200,000 and you'd have $50,000 worth of equity, or you can say there was at least 10 people who came behind me, but I got the deal and I got the house under contract. I can call those people and say, "Hey, you still want this house?" They like gladly would take you. Like it appraised for 250, like no problem. You can sell that piece of paper to them for $50,000, and now they have the right to go buy the house for $200,000. So they're all in 250,000, but they're happy to own it because it appraised at 250,000. You just controlled a $200,000 asset for $5,000, and then you sold that piece of paper to somebody else and you made $50,000 but 45 net profit. That is a call option. You can control a stock for 30 days up to 2 years by buying an option, and if the value goes up, you don't actually have to buy the stock. You can sell that piece of paper, or otherwise known as option contract, to someone else and then get the cash flow out of it. Very similar to real estate. It's called wholesaling, getting it under
Mm.
contract, then turning around and selling it to somebody who wants to own it. So a lot of the concepts are super similar, but nobody really makes the connection and puts them together like that.
Dude, you're exactly right. Because that just, everything just clicked perfectly for me. That's just where my brain's at. And you're right, man. That's exactly it. That's wholesaling. Everybody. And by the way, wholesaling is a very, very sexy thing out there right now, right? Like it's a very popular thing. And you're just talking about doing the same thing. And I mean, you can do that on the opposite side too, can't you? Whereas with real estate, you can't necessarily do it, but you do it the other way if a stock's going down. But for a house, if
Yes.
it goes down, you have no hope, right?
Right. So on the stock market, you can buy put options. And this is what I like to tell people. Again, anyone you listen to is telling you buy, hold. And when the market goes against you, I was listening to your other guest. I think he's your business partner. He was saying how his family lost like 75% of their wealth when the stock market crashed. Anytime I hear stories like that, I'm like, they didn't know about put options. And so people got to understand they are buying put options every single day, especially real estate people are buying put options. So, what do you mean, Jason Brown? What's a put option? A put option is nothing more than an insurance policy that says, for example, if Apple's trading at $100, well, let's use Tesla. Tesla was trading at $400. It fell down to, I think it's trading at like 150 right now.
Hmm.
If you bought Tesla at $400, you could buy a put option. You could buy a $400 put option. So you own the stock, but you could buy a $400 put option that says, if Tesla falls, I can put it to somebody at 400. I can force someone to buy it at 400. Let me put it in real estate terms. You buy a $400,000 house, you buy a $400,000 insurance policy, but you're not paying 400,000 for the policy. You might be paying $100 a month, $200 a month for the insurance policy. But if that house catches on fire, if that house gets hit with a tornado or burns down, you will get made whole. They will come cut you a check for $400,000. It's the same thing. I could say if that company burns down, if Elon Musk sends the wrong tweet, if a interest rate tornado comes through and knocks down the stock market, the Fed says the wrong thing, and the stock falls down to 150, you can cash in that insurance policy and get made whole. And I say people buy insurance on their houses, they buy insurance on their life. It's called life insurance. We even buy insurance on our car. When it comes to the stock market, it's the one place that we build all of our wealth, but we never figure out how to protect it and buy an insurance policy there. And so
Wow.
I'm just out here really trying to spread the word because people always say options are risky. I'm like, not knowing how to use options are risky because you only can make money one way if it goes
Yeah.
up. Your last guest just said they lost 75% of their value from it falling. You mean to
Yeah.
tell me he could have bought a put option contract that could have locked in 75% of his family's wealth? And yet people have the nerve to say options are risky. I say, no, people are risky. The way that people use them are risky. Driving a car is not risky. The person driving it, if they drinking, if they texting. And so we got to start taking
Hmm.
options out of the category of risky and looking at the person and how they're using it, because used correctly is there to minimize risk. And we do it in every other area of our life. But when we come to the stock market, we act like it's a different set of rules.
Man, Jason, Your ability to communicate this is really valuable for me, for our audience. I'm really loving this so far. And what we're going to do, we're going to take a little break. And on the second half, I want to get back into some of these example scenarios, even maybe kind of putting you on the hot seat for some of our audience that has money to invest, and kind of that question, hey, if I'm interested in this, or, I'm ready to diversify into the stock market a bit, where should we go with that? So we'll be right back after the break, more with Jason Brown. Hey, wanted to take a quick break from this week's episode, wondering if you've been asking yourself the question, how do I get started in this stuff? Or what are the next steps? Or where are people that are thinking the same way I am, or that are already doing this stuff? People that are on their passive income journey. Well, we were getting this question a lot. And that's why we were prompted to create a community of like-minded investors and entrepreneurs that we call Passive Income University. This is a place where we have a library of videos of things we've done and ways you can educate yourself on the passive income space. We've brought in experts and had conversations of people that have done this, are currently doing this, and have completed certain parts of this. We have gathered a collection of tools, information, spreadsheets, checklists for you to use in order to continue on your journey in the passive income space. We are going to learn and grow together in order for us to start, take next steps, and complete our passive income journey. If you're curious about taking your next steps, check out our website at p25kg.com, where you can apply to be a part of Passive Income University today. We are back with episode 32 of the Passive 25K podcast. Our title, The Passive Income Investor's Guide to the Stock Market with Jason Brown. Jason is already blowing our minds on this stuff. Why? Because he's using real estate and relating it to the stock market. It's been music to my ears, my man. And so, Jason, I want to get back into maybe some example scenarios. One being, there's a lot of people that we're working with in our community that are saving up different revenue streams. All of a sudden, they've got money set aside, and what do we do with it? We're trying to put it to work, make that money, make more money. And if the stock market comes on the list, like it is for maybe some after this episode for sure, hey, I want to invest in the stock market, but I'm feeling like a rookie. I'm feeling like a beginner. Maybe maybe it's fair to ask you, hey, what would you do? Or even what would be some paths that you could see someone that's maybe a novice, but ready to put down? And I use the number $50,000 to invest in the stock market.
Yeah, so the first thing I would tell someone is you don't need any money to invest. So people come to me and say, like, how much to invest with you? So let me be very clear. I don't invest other people's money. I invest my money, and I also teach how they can do it themselves. I also show what I'm buying, what I'm investing in, what I'm getting in, what I'm getting out for educational purposes, and then they have to make their own decisions. So I just want to be clear. I don't invest other people's money, but when they come to me and say, like, I want to get started, how much money do I need? I always say zero. And they're like, okay, he pulling my leg. What does he mean? I need zero money. Because if you think about how I got into the stock market with that borrowed money from the student loan, it wasn't about having money. It was about learning the patterns first. And so that's what I would employ somebody to do, is first understand what patterns are you looking for. The same way you can look for a property and say, I'm looking for this ARV, after repair value. I'm looking for this type of, return on cash, or whatever the case may be. First, understand what you're looking for. And I teach people the three most profitable patterns. So number one was the channel in stock that I talked about, where you saw that stock, well, when I saw Sprint go from 5 to 4, 4 to 5, 5 to 4, you have to understand, what are the patterns that you're looking for? What are the neighborhoods that you're looking to move your money into? Number two, you want to practice first. So you hear something like this, like, oh, he said call options, put options. I'm going to go buy a call option tomorrow. No, well, yes, but not with real money. You want to open a practice account. It could be with Webull. It could be, there's Robinhood. There's all kind of places you can go practice. And, if you want, we can give you a resource that your listeners can download. We have like a cheat sheet, but they can go practice first. And that's the step that's why I say you don't need any money. If you come to this game with your $50,000 from real estate, but you don't understand how to read the charts, the patterns, and how to minimize risk, you're just going to blow the 50 grand. You're going to blame me. You're going to blame this episode. And you're going to say stock market is risky. We teach people, we say you need to make at least 10 trades. And you need to be right 7 out of 10 times, 10 practice trades. You either need to be right 7 out of 10 times, or you need to be net profitable. And what that means is we cannot predict the stock market where we say like, people say, can you guarantee I won't lose any money? Absolutely not. Right. If anybody does try to guarantee you won't lose any money, run, because they're lying. The key
Mhm.
is not to not lose money. The key is to be wrong less often and be right more often. When you're wrong, be wrong small, and be right big. And so when I say make 10 trades, you could lose $100 on 7 trades in a row, and that's $700 you lost. But if trade 8, 9, 10, you make $1,000, you made $3,000, you lost seven, you're net profitable $2,300. That is the name of the game. You won't hit a home run on every trade, but when you start to see it's going south, it's going against you, or what I like to call, another one of my sayings is, we have a I'm wrong level. People say, well, do you set a stop loss or when to get out? I said, no, we set a I'm wrong level, meaning I was wrong about the direction. I was wrong about the chart. I was wrong to think it was going up. It's going against me. I'm wrong, which is hard for men to say, by the way.
Mm.
It's like they're hard to recognize that they're wrong. And most people stay in the burning ship. Like, but no, it's go turn around and it gotta come back. And I like this company. It's like, listen, I'm wrong. Get out. Okay. Let's go over to the next trade. And so if you can master the emotions of getting out when you're wrong and cutting your losses small, moving on to the next trade and being right and right big, then you're ready for real money. Probably no different than real estate. If you see that this project isn't going your way and you can cut your loss and sell it and move into a project that is, you don't just stay in that burning house, that burning ship, and be like, I'm going to turn this neighborhood around. It's like, look, take the loss. You learned a little bit of lesson. You move over and make it up on the next one. That's the same thing in the stock market. So that's what I would tell someone that's coming in as a beginner. Learn to read the patterns, and then you want to practice first.
Yes, that's amazing advice, and I love the tactical nature of 10 trades, 7 out of 10. I thinking of real estate and how this correlates to a lot of people will hire a property manager, right? Like you'll kind of get yourself one person removed, and I think there's a lot of that in the financial industry. And maybe this is a polarizing topic, but where do you like as far as hiring a professional to do it, which is kind of like what you did in your story, and it's like, hey, at least I could have learned something and lost my money, right? Do you advise, hey, let's build the skills on this versus let the professionals handle it, or a little of both? Where's your head at on that?
So here's the thing, I never want to disrespect anybody who's a Series 6 and 63 licensed person. I believe they have their place in the market for people who just don't want to do it. My thought process is like, look, there's two types of people. Like, if you just want to be involved in the stock market, like, okay, just go get somebody who got a Series 6 63, go contribute to your 401k. None of that is bad stuff. You just want to be involved and you want to follow the Dave Ramsey stuff, like in 40 years and 50 years, maybe. But if you're talking about getting rich now and you're talking about getting rich in the next 5 years, we started a program called 5 Year Millionaire. No professional is going to take control of that for you like you would for yourself. If they would, they'd be a millionaire and they'd be managing their own money. You got to understand that most licensed professionals, again, nothing against them, but people don't understand how the industry works. A licensed professional only gets 1, 2, maybe 3% of assets under management. That means when you come with your $100,000 account, they only get $3,000 for the year if they can keep all those assets under management. How much time do you really think they're going to spend managing your $100,000 account? In order for that guy or that girl to make $30,000 a year, they got to go find 10 more of those accounts. And that's just to make 30,000. If they want to make 60,000, they got to go find 20 of those accounts. And if they want to make just 90,000, they got to go find 30 of those accounts. How much time do you think they're going to spend with 30 people managing their $100,000 account? Now, 100,000 to you, a lot of money. 100,000 to them, where they only make 3%. They're like, I got to go find like 300 people to make a good living off this and
Yeah.
what they call manage a book of business. There is no way they can manage a book of business and grow it beyond an average return, because they stick it into an average account and then they go back to what their real job is, which is being a sales rep and trying to
Yeah.
bring in money and bring in accounts. Now, that's no disrespect to anybody who's licensed. I'm just saying that is the game that they're playing, and it's not their fault, but that's how the industry works. They can't make a living off just managing your one account. So you're
Yeah.
most likely going to get average, mediocre returns, as well as the long term, stick it in here, wait for 40 years, come back and check on it later type advice. And again, if you're that person, go that route. But if
Yeah.
you're like, man, if you're like me, I'm like, I want to be a millionaire now. When I say now, I mean like in my 30s, in my 40s. Like, I don't want to wait till I'm 60 and be like, I finally did it. And now let's just dwindle it down till I die. Like, that just didn't sound appealing to me. And so, people got to choose their track in life. It's not good or bad. It's just, you know, which way do they want to go? Now, let me also say this. I believe in both and it's not just either or. I
Yeah.
contributed to my 401k when I was working a job because they did a match. That's just basic financial literacy. So they're going to match it 6% free cash that they're going to give me on everything I put in. Why not get that money? They're kind of two different topics when we come to financial literacy and putting money in a 401k, and then maybe putting some money away for a professional to manage a small portion. And then you also take a portion to see if you can out earn the professional. Those are topics of more bigger, broader financial literacy items that, I mean, we could go down that route, but I hope that gives people some perspective on the decision-making process when it comes to that.
Yeah, and I love the sentiment of it's an and thing. And maybe my question kind of pits it against, or one versus the other, but again, all of these are a lot of our vision is around having multiple streams of income that are producing for you, around building a table with multiple legs. And we're huge on building skills that you not only can use for yourself, but use for your families, pass along those assets, which are really the things you've learned and the knowledge. And so I'm huge on that. We're huge on that, like communities like yourself, where we can actually watch people that are in the game as well. And something came up with this with the stock market, especially recently. It's an emotional thing. It's heavy on the emotions. A lot of people correlate the stock market with an emotional high, emotional lows. Cryptocurrency got thrown in there, and that was even throwing people for a whack. In real estate, it's funny because you can get really frustrated at real estate, but you can't just like say goodbye and it's gone in a couple of clicks, right? It's a lot harder to liquidate real estate. Some people do it very quickly, but speak to that a little bit, because I think anybody out there that's listening that's had that emotional pull, or they've gotten burned and now they're kind of damaged goods, how do you manage that if you're going to build these muscles?
Yeah. So first is just common sense. And when I say common sense, for me, what I said was like Warren Buffett, it works for him. Why can't it work for me? Right? He's a human being. I'm sure Warren Buffett doesn't come to the stock market and gamble every single day. He comes to it with strategy. He comes to it with tactics and skill. And so you really just have to learn the skill if you want to make money in any industry. The problem with the stock market is that we've been taught that it's like a casino or it's like gambling so much that most people just don't even understand how to use options to make money the other two ways. So we already come in doing what? Buy low, sell high. I mean, that's
Mm-hmm.
it. We come in, buy low, sell high, buy low, sell high, like as if that's the only thing to the stock market. So we're already introduced to it from a gambling standpoint. It's like, what's going to be the next stock? Is it a marijuana stock? Is it a Bitcoin? What's going to rise and just go up overnight? We're not introduced to it from a strategy standpoint. No one says what companies are doing bad so we can buy put options on them.
Hmm.
Have you ever thought about that? When Apple came out with the iPhone, you could say they're going to eat BlackBerry's lunch. Let me get some put options on BlackBerry. No, we're talking what's the next Apple? What's the next Tesla? What's the next Amazon? What's the next Google? Why? Because all they feed you is buy low, sell high. What's the next stock going to the moon? Right.
Hmm.
So that's part of we have to recognize that's part of the problem. We came into the game gambling. First, if we can recognize that, we can start to detach what happened from the stock market from thinking something's wrong with us, or that, we got bad luck or something like that. I think the second thing that we have to understand with respect to the stock market is that the stock market is a natural reflection of you and your real life. I tell people, I told somebody this the other day, well, I'm on my Instagram. I'm like, okay, if you're up $500, why wouldn't you close it out and take the 500? They're like, well, I thought I could make 1,000 or 2,000. And I said, you greedy. Like, you had $500 that you didn't work for, you didn't punch the clock for, you just like put money to work. You woke up a day or two later, you had 500 bucks. Divide that by two, that's $250 a day. And that was not enough. It's like that probably shows up in other areas of your life where you're greedy, you're ungrateful, you think you should have more than what you should. And so a lot of times the stock market is a reflection of who we are. We gamble in real life. Maybe you run in red lights, it's yellow. Let me see if I can beat it. It's just a matter of time before you get into a car accident. And so the stock market isn't really the problem. A lot of times it's how we live our current lives. We're ungrateful. We're gambling,
Mm.
running stoplights. We're speeding, trying to see if we can not get caught this time. And then we come over here to one of the biggest wealth creation machines and we think we can trick it. We think we can beat it. We can speed it. We can run the red light. We think we can guess which one's going up higher next. And when we treat it like that, it is like a casino and the house always wins. And so we
Mm.
have to work on our own mindset and our own character if we want to be successful in the stock market, because it is the one place where it holds up a mirror and say, you probably do this in other areas of your life. And that's why I started my podcast. My first podcast was called The Brown Report Stock Market Report. And then I realized people don't need more stock market stuff. They need mindset training. And so we
Yeah.
switched it to the Money Markets and Mindset podcast because it was people just doing stupid stuff. I don't want to say stupid stuff. They were having a hard time breaking the chains of the poor financial decisions that either their parents put on them, the news, their friends in the Reddit forum who bought a stock that shot up and they watched it come all the way back down. And so we have to break that poor mentality and mindset and switch over to an investor mindset and the mindset of those who build real wealth and realize you can't take the number one or number two compared to real estate, however, whoever's measuring it. Some people say real estate number one, some people say stock market. Doesn't matter. You can't take the top two wealth machines and then separate one out and call it gambling, call it luck. It's like, no, you're gambling.
Yeah.
You're going to it like a casino.
Yeah, man. And that's huge. I think that hopefully is words of encouragement for people that are, you know, coming at it with the wrong mindset. I know that I have in the past, and I want to circle back to a couple things you said. And of course, the passive income, passive 25K podcast, I'd be remiss if I didn't say, what parts of this are active? Which parts, how can you make or have a vision for passivity with this if possible? And then I even want to dive into, and this might be a tactical question, but you even kind of related to like, hey, selling some options in order to kind of almost, it's like your rent payment, or, how can you start to look at this in a sense of a passive income stream?
Yeah, so I like to say passive-ish.
Yep.
You know,
Yep.
a lot of
Hmm.
things that people think are passive are not really passive, but it's passive-ish. And
Yes.
so the stock market is the same way. You could buy 1,000 shares, or you have to buy at least 100 shares of any company so you can rent it out or sell options against it and get that rental income. So if you can afford, let's just take Amazon trading at about $102. So you need about $10,200. Just with $10,000, you could start bringing in anywhere between $200 to $300 potentially a week just selling Amazon covered calls or options against your stock. So you could do that weekly. If that's too often for you, you can also sell a 30-day option and treat it more like rental income. So every 30 days, if the let me explain how this works because this might go over people's head. Let's say you buy Amazon at about 100, let's call it $105 right now. You can sell $107 call option saying, hey, you can buy it from me in the next 30 days at 107. They will give you $3 a share for that. If you got 100 shares, that's 300 bucks. Now remember, you put up $10,000 to buy 100 shares, $10,500 if it was at 105. So you put up 10,500 bucks, but they're going to give you $300 for the right to buy it. So that's that person coming in trying to wholesale. They want to control it and hopefully the price goes higher. That's what they're hoping for. You're like, look, if it doesn't go to 107 at the end of 30 days, I keep the $300 because they're not going to buy it from you if it's at 106. They're not going to buy it from you at 107. So you get to keep the 300 bucks and then you get to do it over again next month. Now, what happens if the stock goes to $109? They're going to call you up and say, hey, I want the stock at 107 because I can turn around and sell it at 109. You're going to say, no problem. I get to keep the $300. That's my rent. Plus, I own it at 105. You're buying it from me at 107. So I also get paid another $200. So I make $500 in passive income. I can either then do it again with Amazon, or I can find the next stock, just like you would find the next house that's around that price point. Now, the key to doing this, though, because people say, well, what happens if I get called out every single month? The key is looking at the stock chart and selling the option just far enough out that we don't believe it's going to get called away from you. So I might actually sell a $108 option, send it $3, $4 out, and maybe I'll get a little bit less in rental money if I don't want the stock called away from me. So there's a little bit of kind of song and dance if you don't want it called away from you. But if the stock gets called away from you, it's just like selling that house. You said, hey, if someone's willing to give me, 107,000 for it, I'll take it. If the inspection comes back and it's 105 and they're like, I don't want to do the deal, you get to keep the earnest money deposit. You're like, hey, great, we could do this dance again next month. But if it comes back and someone's like, I want it, prices increase, you also can't cry and be like, oh, I didn't really want to sell the house. You're like, no
Mhm.
problem. I got rent for 2, 3 months. Then I got the appreciation of the from 105 to 107. It's a good day. Let's go find another house and do it again. Same thing with the
Yeah.
stock. Let's go find another stock and do it again.
It's just like your shirt, man. You never go broke taking a profit. And it seems like you have win-wins built in there. You know what I mean? Like, hey, if it does get called away from you, there's a whole rinse, reuse, repeat thing here, like that you're up for. Or you collect that rent money. Thanks for trying, and we're back at it again. I mean,
And here's what I also tell your listeners that they don't understand about the stock market, which is powerful. If you own Amazon at 105 and you sell 108 strike price option, you get paid $3 for it. If the stock doesn't get called away from you, that $3 just lowers your cost basis. So you bought it at 105, you got paid $3, and at the end of 30 days, you didn't get the stock called away from you. You technically now own it for 102. So now the stock could fall $3 and you could just break even and walk away scot-free.
hmm,
So
yeah,
it's like
man.
a double win built in. If it goes up, you get called out. You keep the 300 and you get paid an extra premium. If it falls, you got a $3 cushion now.
Man,
So there's so many different nuances to the game that most people just don't even
yeah,
understand.
this is just, I have to believe, even in my own network, there's a large percentage of people that are not using, or just haven't jumped into the knowledge on this at all. They just haven't taken that extra hour it would take to just research, or better yet, done the practice reps like you just mentioned. Like, all this would take is those 10 practice reps to really get a feel for it and be like, okay, I did it once, did it again, I'm understanding this. Oh, your first free throw is usually a brick, but then you start banking them in here pretty quickly. So,
Absolutely.
man, it's really groundbreaking, because I think everybody puts it on a shelf and has these terms that they know of the stock market, but never have heard them in it being applied like this. So, Jason, I'm super thankful. You know, the stock market right now, I just want you to touch on where you're seeing this go with everything. And so this is my loaded question, crystal ball question, but for a guy that knows and does some research, just where's your head at with this? And maybe it's not like, is it good or bad, because you're making money in all three different ways. Is that kind of your mentality around where the stock market goes?
Absolutely. You want to be in a position where you don't care if it goes up, down, or sideways. You know how to make money all three different ways.
Man.
But respect to where do I think it's going, there's an unrefutable fact about the stock market, and that is long term, the market goes up. You can't refute it. I don't care if you look at the '08 real estate crash, the most recent bank crash. You can look at the pandemic. You could look at 9/11 when they flew planes into New York. We always go higher long term. There's not been a disease, a war, or an interest rate or recession that has kept us at that level longer than roughly 2, maybe max 3 years. So long term, the market goes higher, but it's how do I make money in those times where it's going sideways, or more importantly, when it goes down and everyone panics and gets out at the bottom? How can those be the times where I get rich? And that's what options afford people to do. I'm sure your community can resonate with this, but if anyone watched The Big Short, if you really understood options, he bought a bunch of put options against those real estate loans. He bought a bunch of put options. And when the market crashed, the dude got flat out rich. And I believe it was Steve Carell's character, not Steve Carell, but I forget who Brad
Christian
Pitt.
Bale.
No, Brad Pitt. When Brad Pitt said to those guys, he said, "This isn't funny. Do you realize what's happening?" He was like, "We're gonna be rich. Yes." He was like, "We're gonna be rich, but this isn't funny." He said, "Because if you're right, that means millions of people are gonna lose their jobs and their houses." And that's the game. But they understood, like, that's sad, but we can buy put options and we can make money against the defaults when everybody defaults on their loans. That's the same with the stock market. Most people don't understand. There are people that get flat out rich from stock market crashes. And then the broke people, or should I say the people that are not in the know, they say, those rich people, I hate them. I lost my house and they got rich. And it's like, it had nothing to do with you personally. I just knew how to make money from people losing their homes and losing their jobs by buying put options. I knew how to make money from companies laying people off, from banks going under. It's no different than they did in that movie, The Big Short. They saw the opportunity and they bought put options against those mortgage swaps. And when they crashed, they saw the trend. They looked at a chart. Same way you look at a chart in the stock market. They saw the trend and they bet against it.
Man,
I'm telling you, you will watch that movie with different eyes now that you understand.
Yes,
you will be like, "Oh my God."
True. Yeah, that's on the list now, man. I appreciate that, and it makes sense. It really does. I understand. And Jason, you've been super insightful, man. I want anybody in our audience listening to be able to find you, to be able to see what you're up to, what you have to offer. I know you even mentioned, I keyed in on, a downloadable item for the audience possibly. How can people find you? Give us some insight there.
Yeah. So first of all, again, thanks for having me. Thank you everyone for listening. It's been fun. And my passion has always been, I said, if I learn this stuff, I wanted to explain it to where everyday regular people will understand it. And I hope I did that today. And so for people who really are like, man, this just makes sense. How can I learn more? They can pick up what I call, we have two different downloads. One is the Stock Market Starter Pack. And basically, I walk you through the 3 most profitable patterns. Those 3 patterns, I talked about one, which is the channel and stock. I talk about the other 2 there. I also walk you through how you can open your first practice account, get your first stock for free, and get started practicing. The other one is the Stock Option Starter Pack, where you can actually start to learn how calls and put options work. And I walk you through how the terminology, what's a strike price, expiration date, all that stuff in that document. Both of them can be found at thebrownreport.com. If they just go to the main website, you'll see the 2 downloads right there on the homepage. Stock Market Starter Pack, Stock Option Starter Pack. From there, they can also check me out on Instagram, YouTube, podcasts, all the other stuff. But the main place to go is just to thebrownreport.com.
Amazing resources. Everybody will definitely be checking that out. I will. Man, the perspective has been amazing. The way you broke it down, you definitely achieved your goal of making this relatable and to a audience of a lot of real estate investors. So, man, that was awesome that you keyed in on that. I thank you so much for joining, and I know this won't be the last time we talk, Jason. And I'll end our episode by asking the same thing I always do. What's one action step you can take based on what you heard today? Do not wait. Action is key, you guys. This was packed with knowledge. I hope you take action. And if you're currently on your passive income journey, reach out to us. Tell us your story. We truly believe that we can accomplish financial freedom better together. This has been another episode of the Passive 25K podcast with Kyle Reedstrom. If you liked what you heard today, I encourage you to subscribe to our YouTube channel and like this video so we can get more of these conversations out to people that are curious about starting their passive income journey. And if you are thinking about starting your passive income journey, the next steps are to go to our website at p25kg.com and hit apply. This will get you into our application to join our community called Passive Income University, where you can learn everything there is to know about starting and completing your passive income journey. Thanks again for tuning in. I'll catch you next time for another conversation on the Passive 25K podcast.